You have to expect inflation to start to pick up again in 2025. Hopefully the economy doesn't go into a recession, because then you'd have stagflation, which, as we know, is the worst of all scenarios.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for December 3rd through December 10th, 2024, while supplies last. Right now we have 1 ounce silver backdated South African Krugerrand at just $3.19 over spot per ounce. We also feature the limited edition 2024 1 ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Gareth Soloway from Verified Investing. Gareth, thank you so much for joining us today.
Oh, it's great to be back, Elijah. Thank you for having me.
Well, it's great to have you today. I did want to discuss the main topics today would be precious metals, the stock market, and Bitcoin. Maybe start off with Bitcoin here, what you're seeing, because it seems like, we're seeing a bit of a pullback after Bitcoin went above 100,000 the other day.
What's very fascinating is you usually get these tops around even numbers, because once you pierce an even number like 100,000, anyone that was sitting on the fence usually gets that last little bit of FOMO, and it gets them to jump on board. And you also have shorts that have been shorting Bitcoin that get stopped out right above 100,000. So it's almost like a culmination of extreme emotion. What we saw that day here where we hit 104,000 is that reversal back to 92. And then a close right in the center. And this candle formation right here is called a doji. Dojis are usually, when they occur at tops of charts like this, they're usually reversal signals, meaning exhaustion. Essentially, a doji is formed by buyers coming in, pushing it up, and then sellers pushing it down. Essentially, they're meeting at a stalemate right in the middle. And the reason why that's bearish is that you've been on a bull run in Bitcoin, and now you're finally getting an equal number of buyers and sellers versus more buyers than sellers prior. That usually is the turning point for a little bit of a pullback. Now, the question is, how far will we pull back? And right now, keep an eye on this level right here. It's an amazing trend line. And if we draw that line across, look at how it was all of these highs right here. And then we broke out. We came back. We hit it. We rallied higher, pierced 100K. And then on that same day, kissed that level again. And now are starting to come back. So essentially, if you're a Bitcoin investor here, you want to be bullish as long as you hold 91 to 92,000. But if it breaks that, that's where you'll start to get a bigger correction, possibly as low as 75,000.
That definitely would be a big correction there. It seems like the psychological level of 100,000. I mean, obviously, there's no upside resistance technically, but definitely the 100,000 level, I think, might be hard to stay above. It might be kind of resistance, even though it really hasn't traded there in the past.
Yeah, and I think it is. I think from a psychological standpoint, it's we've all gotten used to looking at 20, a 2 in front with with 4 zeros, 20,000, 30,000, 40, 50, 60, 70, 80, 90. What we haven't gotten used to as a human population is seeing those 5 zeros, right? 1 and then 2 more to make 100,000, and then 3 more after that. So again, I think you're right on that, is that psychologically, it's a big step where people are finally saying, hey, let me take some profits here to protect myself. And I also think that, you're in a position now where Donald Trump is going to take over, and he's really, or at least the crypto community has really felt that he's promised a lot. And I think that's created this bull run in a lot of the altcoins as well as Bitcoin. But the key is for Bitcoin to get its next leg up, he has to deliver. And that's, I think, what we're now waiting for is, will he deliver? If he doesn't, then we're headed back to 74, 75. If he does, maybe that gives us the next bull leg in crypto.
Do you have any forecast in that regard? Are you still bullish long-term for Bitcoin, or do you see that it might be a bit overbought right now?
So short-term, it is overbought, definitely overbought. It almost does feel like the bullishness got to such a fevered pitch that you almost want to see that natural flush out that Bitcoin usually does to kind of maybe make people a little skeptical again before that next bull run. But longer term, I mean, the adoption just continues as a safety hedge, investment against fiat currencies. We're seeing it more and more talked about amongst big institutions and big players. And so I think the long-term outlook for Bitcoin continues to be really robust. But Bitcoin investors, you just have to be ready for those 20, 30, 40, even 50 or 60% corrections in price. That's been normal. In fact, they've really been closer to 75 to 85% historically. I think that volatility starts to come in a little bit, but you're still going to get your 30, 40% corrections pretty commonly.
We do see gold popping, it seems like today. Also silver. In your view, are we still in a bearish pattern or have we turned to be bullish?
Yeah, so right now it still looks like it's just hanging on to that bearishness here. And you can see, again, you have your trend line connecting the lows and here. And this really, again, if you look at it like an upside down flagpole, we've all heard about bear and bull flags. This is your upside down flagpole and this is your flag right here. So as long as we kind of stay in this sideways chop, it still does have a little bit of bearishness to it. But I do think it's an impressive rally today in gold. The dollar's not really falling, so it's not the dollar that's doing it. The question I guess I would have is this because Bitcoin is falling? Are you seeing a rotation of capital, which we've seen in the past when Bitcoin does really well? I mean, what's fascinating about this, just to touch base, the high on gold here, which was your all-time high, was back at the end of October going into November. And what we know is that Bitcoin started its bull run at the elections right here on November 5th. And so you almost get this sense that there's a little give and take where money goes into Bitcoin when it's hot, but then when Bitcoin cools, that money comes into gold. And I think there could be something to that and maybe what we're seeing. But suffice it to say, even having said that, the pattern specifically on a technical analysis basis is short-term bearish, but you do have support here. We can look at this beautiful parallel channel where the highs connect right through here and you have these lows. And as long as you don't break this, then you would be buying pullbacks on gold here, even if you dip down to about 25.90.
Long-term for gold, your outlook here?
Yeah, long-term, I'm still very, very bullish. Again, as long as our government can't get it together and stop spending money. And I mean, I know we've heard about this Department of Government Efficiency, but I have this healthy aspect of skepticism when it comes to anything political, where until I actually see it imposed, I'm not going to believe that it's going to happen because politicians have a way of wanting to be reelected, and when they make spending cuts and people do more poorly, they tend to not get reelected. So I would love to see cuts in government spending. I think most Americans would, but the question is, will it actually happen? I'm hopeful it will, but until we see it, gold is still the place to go, and really longer term Bitcoin as well.
Definitely. I mean, I have hopes for the new administration too, but realistically, cutting a lot of the spending, I mean, a lot of the spending is not something you can just cut, and even the stuff that they may have to cut, or it may actually be able to cut, it'd have to go through Congress and everything. It's not just an executive action or something like that.
And I think one of the things that I find fascinating, and this is more on a human psychology, like if you took a poll of everyone, most of them would say, yeah, the government spends a ton of money we don't need to spend, but people aren't connecting the dots that if that spending is cut, it likely means a rough recession, right? You can't, if you're spending X amount to stimulate, essentially government spending generally stimulates unless it's payments on our national deficit, which is just wasted money. But any other spending is stimulative because it's putting money in people's pockets that they then spend. And so are people really ready for a, rough patch if we do cut government spending? I think people say they are, but when the rubber hits the road, as they say, the question is, will they be okay with that?
Now, if we look at silver here, there's kind of a debate out here. Is it acting more like a monetary metal, more like an industrial metal? What is your take on how silver is acting right now compared to gold?
Yeah, so I do think it definitely acts much more like an industrial metal, but we still see that same sort of thing where going into November, when Bitcoin and crypto took off, that's when silver started to come in. Now, again, same sort of pattern. It's not as clean as the gold bearish pattern, but this is your flag pull down and then this sideways chop. And notice how this high end trend line right here, and I have these lines drawn in just to kind of show the pattern formation, but essentially this line is parallel to this line, and that's where silver has stopped today. So as long as we stay below this 32.15 level on silver, you would anticipate a pullback to the downside here, maybe even a retest here, maybe another move up, and then eventually that move to the downside. And again, I'm still a skeptic on the U.S. economy overall, that at some point we're going to have a recession, whether it's in early 2025, late, or in 2026. You can't postpone recessions forever. There's no such thing as that. We have boom and bust cycles. And so at that point, I would be concerned that silver could take another leg down. I'd be a buyer around 27.75. There's a lot of support there. And again, 5-10 years with fiat currencies going the way they are with printing and debt, I think silver's a lot higher. Shorter term here, I'm a little skeptical based on the price action and the patterns.
I think I myself and a lot of people were thinking when silver gets above 30, then it's off to the moon from there, because there's not much resistance above 30. But your take on why really we haven't seen that?
Yeah, so I think part of it's been China, right? China's economy, and you've seen copper come in massively as well. If we take a look at copper had this bull run early in the year, and then really we topped out in May, and since then it's come right back in. I think that's, while the U.S. economy has stayed strong, we've seen the price action in copper go down because of China and the rest of the world. And I think that just creates this negative aspect to silver. So while people are buying it as an alternate to gold, it's a cheaper version of gold, if you will, there's this obvious need in industrial side. And I think that's really capped the upside here. I still think we're going back to 50. It's just a matter of how long is that going to take before we get back to 50.
Now, when it comes to the stock market, I know you've done some analysis recently. It looks like you're kind of bearish right now, or at least you're saying that the upside potential in the stock market is not really worth the risk of the downside.
Yeah, and I think that's the kicker is there's this beautiful trend line going back to October of 2023, which really was that beginning of this incredible run to the upside, right? And what we saw here is this, initially it got away from this trend line for a long period. It came back, kind of did a double tap, smaller bounce, a little bit bigger bounce. And then what we've seen here is it broke down, and then this line becomes resistance, getting rejected every time it gets up in there. So for me, it's kind of like, okay, maybe we get up to this, 6150, 6160 level, but we just have to look at history and what it's done. And very clearly it rejects it every time. So in terms of being bullish or bearish and risk versus reward, your upside here is less than 100 points on the S&P versus any sort of downside could kind of get nasty. There's not a lot of support down in this range. And so again, if you look at valuations, the Buffett rule metric, things are so extended. For instance, the Buffett rule metric that he uses is 2 standard deviations away from the norm at this point. Now, a lot of people will tell you, oh, that's old school analysis. But what I've learned is that when people say that, it's usually they're just trying to justify why valuations don't matter anymore. And inevitably, we've always seen valuations come back to mean something later on. And so again, for me, for sure, I'm definitely leaning more towards the short side, understanding there could be a little bit more upside, but we're probably in the 9th inning of this bull run.
And what kind of downside potential do you see for the stock market once we do see it fall?
Yeah, so for me, what I like to do is just take that same starting point and connect it through those other lows. So taking the August low right here, which was an incredible short-term correction, you would probably be looking at, this line here, and then the market could dip into that level. We could do a quick measurement to see what that would ultimately be from the current levels here. And that would be about a 7% correction. Now, that would just be a short-term pullback to that line. I think you'd get a bounce off of that. The bigger issue would be if we start to think the recession is finally on the horizon of the U.S. markets, right? So as long as, like if nothing goes wrong and the markets keep plodding along, I think 7% pullback is your run-of-the-mill pullback. If we get into a scenario where the economic data starts to weaken significantly, that's where you start to really say, do we break some of these levels and then really start to have the bigger corrections down to these lows, maybe retesting the August low from 2024, which, by the way, it seems like a big move down. That was only about 4 months ago at this point. It's not that long ago that we were right down here. It's just that we've been on an incredible move to the upside. But I think, again, the key is, can the economy continue to grind forward versus slipping into a recession? And again, that's the tricky thing. And I know we're going to talk about inflation, but my biggest concern is that the economy, we're not back to 2% inflation, and the Fed is already cutting rates. And again, that's a concern of mine for sure.
I did want to touch on all of that. So I guess first with the economy, your outlook for that and the potential numbers we might be getting for economic data coming soon.
Yeah, so my outlook for the economy still remains skeptical that we're just going to miraculously never have a recession. I thought we'd honestly, by the end of this year, I had already talked about thinking we'd be in a recession. Certainly that hasn't happened. I think I was underestimating the amount of liquidity in the system and how much the wealth effect from the stock market is helping the high-end consumer just continue to spend money, which is then stimulative to the economy. And let's be fair, the U.S. debt deficit keeps going higher because the U.S. keeps spending money in so many different places as well. But I think inevitably that's going to happen. History is one of my best guides. And, we're basically at the longest point between recessions that we've almost ever had if you take out the COVID quick collapse that we saw. So you have to look at that as a likely scenario. The question is it in 2025? I do think it gets there. I think that, again, we've seen the low-end consumer, which is, the McDonald's eater. McDonald's has said, hey, people that make less than 50K can't even go to eat at McDonald's anymore. We're also seeing inflationary pressures starting to pop up again. Upticks in inflation like PCE recently we saw as well. And so, you start seeing inflation and the stock market stops going up and the high-end consumer starts to panic and stop spending. And then that recession will come very, very quickly. So watch that high-end consumer, right? And essentially by doing that, watch the stock market. The second that stock market doesn't make new all-time highs every couple weeks, that's when that consumer is going to say, oh my goodness, my 401k is not up another $10,000 this month. Maybe I can't go on that next vacation. And that's where consumer spending overall starts to come in.
And what about inflation? Because we've seen official numbers pretty good recently, that are pretty good recently. And I think a lot of people are thinking inflation is under control. At least, if you listen to the mainstream media, that's kind of the narrative right now. Do you think we're going to see another wave of inflation coming soon, though?
I do. I'm very keen on what happened in the 70s. I think that, one of my issues, and I know a lot of people have raised this issue, is that the Fed has said 2% is their goal target. But here we are at around 2.5%, and the Fed is already starting to cut rates. In addition, you look at coffee prices, cocoa prices, sugar prices. You're starting to see a lot of the food side of things, prices starting to go up pretty dramatically. Now, energy has still stayed relatively low in terms of oil, and oil still looks really weak to me because the U.S. is producing so much. So that helps keep inflation down. But food inflation is the one you can't avoid. I mean, everyone has to eat. And I do worry that food inflation will continue to be passed through to the consumer. In addition, we're starting to see some of those pressures from potential tariffs. And we know tariffs, in fact, Trump just said, I think it was over the weekend, that he can't guarantee prices aren't going to go up when he imposes tariffs. And so that's what I've been saying for a while, is that tariffs tend to be inflationary. Because again, if you can buy a widget in the US for $1, or let's say $2 in the US, a US made widget, but China would sell it to you for $1, but now all of a sudden you have a 100% tariff on that China widget. Well, now you have no option but to pay $2 for a widget. And that means it's inflationary. So you have to expect inflation to start to pick up again in 2025. Hopefully the economy doesn't go into a recession, because then you'd have stagflation, which, as we know, is the worst of all scenarios.
It seems like there's this idea out there, and I think a lot of people voted for Trump because of economic policy, and I think he might do a lot of good things economically, but I think there's a little bit of a misunderstanding that, the president has direct control over inflation, where really fundamentally it has to do with the money supply, and that's the Federal Reserve. So your perspective on that, do you think Trump's administration will impact inflation and kind of cool down inflation at all, or does Trump really have nothing to do with it?
Yeah, I don't think Trump has a lot to do with it. I think the tariffs, for instance, like if he imposes sweeping tariffs on Mexico, Canada, and China, then that would have an impact on inflation. But aside from that, you're right, money supply and essentially the more money people have in their pocket, the more competitive spending there's done. So for instance, if I want a TV and 100 other people want that same TV, it's going to go to the highest bidder. And so the more people that have money, the more prices can go up because there's more people willing to pay. There's always someone that'll pay a little bit higher. And so the creators or the makers of TVs will figure that out and say, okay, we can pass this cost along because people are willing to pay a little bit more. So a lot of it has to do with how much money people are making, which again is a tough one, right? Because we all want people to make more money and do better in life, but it also is inflationary, which is why inflation generally goes up during economic boom times, because people are making more money during those times. So there's more competition for goods. So I think, again, there are certain policies that Trump will be able to control that could alleviate pressure on inflation. But you're right. From the most part, it's money supply, how much money is in the system, how much money each individual has, and therefore how much money is competing for the same goods.
Well, Gareth Soloway, thank you so much for your time today. And before we let you go, where can our viewers find you online? And what are some of the key things that you're looking out for those, trading in the market or simply investing?
Yeah, so you can find me at verifiedinvesting.com, which is a website we created to basically be the bridge between institutional knowledge and analysis and the retail public. So we're giving out so much institutional knowledge and data there for free. And then really what I want people looking forward to or keeping an eye on is definitely the economic numbers, inflation numbers, and also policies. Keep an eye on these tariffs. This will be something big. But I would just say that valuations are incredibly high right now, and just be very careful. I know it seems like the markets never will go down, but there will be a point when the ripcord is pulled, and it's generally when people are feeling most bullish about the stock market, the crypto markets. And so you just want a healthy dose of skepticism. Nothing goes up forever. Generally, if we're patient, we get a better entry price on a pullback.
Fantastic. Well, Gareth, I really appreciate your time today. Thank you so much, and God bless.
Thank you. You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for December 3rd through December 10th, 2024, while supplies last. Right now, we have 1 ounce silver backdated South African Krugerrand at just $3.19 over spot per ounce. We also feature the limited edition 2024 1 ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.